Good morning, good morning, good morning. Yes, you can tell by the sound of my voice, I am finally human. Welcome to today's Morning Blast. It is Friday, the 13th of June, all day. You join myself and Michael Brown, where we will be giving a review of the previous day and a preview of today. But before we do, let's get the legals out the way. Nothing discussed on the Spaces session constitute trade or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown Shoes Brown.
Good morning, Ryan. Good morning, everyone. Very happy Friday to you all. The sun is shining, the shorts are on, and the weekend
Oh,
is
whoa,
almost
whoa,
upon
whoa,
us.
whoa, whoa. Let me stop you there. You wearing shorts?
I am indeed, and I only mentioned that for the benefit of Mr. Rich Bernard, who I can see on the call this morning.
Wow, wow. Well,
I will happily clarify that when I need to go out later on, they will be swapped out for a pair of jeans,
oh,
as is
boo,
appropriate.
boo, boo. Oh, okay. Well, enough of our sartorial updates. What's going on in the markets?
Indeed, yes. Enough about shorts and mismatched shoes, because there is actually quite a lot to talk about this morning. Of
Indeed.
course, geopolitical developments coming to the fore once more, and what better a co-host to have than
Oh, stop
someone
it.
who
Stop it.
someone who
You
used to
bastard.
trade
You
crude. And
bastard. You bastard.
I know you don't like to mention it, Ryan.
I
So
don't,
I
I don't,
thought
I
I'd
don't.
get in
Mainly
there ahead of
because,
you.
mainly because I can't remember most of it.
Probably for the best. In terms. In terms of those geopolitical events, I'll give a relatively brief summary, although with the caveat that if you are listening to this back at some point later on, this is
10
as
minutes time.
information. Yeah, this is as information stands at 8:30 Friday morning here in London. So the situation could and probably will change in very short order. So what's happened overnight is that Israel have launched a pretty wide-ranging attack on Iran, including various infrastructure associated with Iran's nuclear program, as well as other military facilities and the residences of key military leaders within Iran. This attack has obviously caused quite a lot of damage in terms of those facilities. It has also killed the Iranian Revolutionary Guard's chief, a chap called Salami. What a brilliant name that was. And also others, including the head of the armed forces and the chief of staff of the armed forces, Mr. Bagheri. So quite a significant escalation in tensions within the Middle East. Of course, this comes after a couple of days of reporting around various personnel being moved around and evacuated from the
Yeah.
region. The IAEA gave a rather worrying update on the state of Iran's nuclear program yesterday. So I think the attack has, you can't say it's a complete surprise, but nonetheless, it has caught markets on the hop a little bit
Yeah.
this morning.
Just
Um,
just if whilst we're just talking about this, I might as well get out the like a roundup of the headlines from the overnight news roundup on this. Just one thing to I will flash before I just read through these bits, just because it saves us coming back to it in like 10 minutes time. Um, just we spoke about yesterday about it wouldn't be a surprise if Israel didn't let the US know until after the event. But the reports we had last night, because for some reason I'm still suffering with a bit of jet lag and on Las Vegas time, so I was following all this live in the early hours, was the Israel did actually let the US know just before they started the wave of attacks. I believe up to 200 fighter jets were involved. But if
yes,
you won't,
that's right.
if you don't mind, Michael, can I just read out the geopolitical headlines
Fire away,
relating to
because
this?
it's gonna save me a job.
Thank you. So as normal, this is taken from the overnight news roundup, which is graciously put together by the amazing Zach. So to begin with, so Israel's massive strikes on Iran target nuclear and missile sites. Israel launched a historic airstrike on Iran on Friday, hitting nuclear facilities, missile sites, air defences and senior officials' homes, killing Iran's top three generals, including Mr. Salami. We'll see if pepperoni is also in the mix. Oh, I shouldn't
They're
jest
being
about these things.
sliced up.
Oh God, stop it. Very well done. Over 200 warplanes dropped hundreds of bombs in the largest attack on Tehran since the Iran-Iraq war. Israel called it a preemptive strike to halt Iran's nuclear program, with PM Netanyahu, obviously who we know is suffering domestically, politically, vowing operations for days, many days of strikes, quote, as many days as it takes. So the language that's been seen so far is very much this is the first wave.
Mm.
And again, this is as of time of, to coin a phrase from our friends at News Corp, as time of pixels.
Oh,
So I know
ugh,
Michael hates.
yeah.
So far, I've not seen anything with Iran retaliating. Though we expect them, they will. But
Well,
again,
actually, I was going to say we keep cutting into each
oh
other
no,
here, but actually,
sorry. Actually, I disagree. Sorry, I'm not read my own headlines. So apparently they have. Iran responds with drones, points fingers at US. Iran retaliated with 100 drones aimed at Israel, many intercepted in airspace. Iran's foreign ministry accused US of coordination and authorization in Iran's
one
attack, Israel's attack. Sorry, one sec.
one thing
Raising
I
fear. Oh, go on. One sec. One sec. Raising fears of broader conflict. Iran also cancelled nuclear talks with the US indefinitely. They were meant to be meeting in Muscat on Sunday. Go on.
Well, I couldn't hear you over the motorbike that was in the background there.
Sorry.
One thing in terms of the drones, and I am by no means an expert in the military whatsoever, but the obvious parallel is last April when the two were last attacking each other, and what we
Yes.
saw was the drones were launched first because it takes between sort of 5 and 7 hours to get from Iran to Israel. And then much later on, there were missile launches, cruise and ballistic missiles were
Yeah.
launched with the aim of all of it arriving on target at the same time. So just because the headlines that we have at the moment are they've launched 100 drones and a lot of them are being intercepted, don't go thinking that that is kind of the extent of the
Oh, yeah. I
retaliation
don't.
that we will
Yeah.
see.
Yeah, I don't think for a second anyone should be thinking that. Also, one thing to note, and this isn't in the information that I've been given by Zach. One thing to note is I did see this morning, and again to mark a difference between this occasion and what we saw last time when the drones were sent over and the missiles were sent over. We had the US and the UK warships and airplanes were intercepting drones and missiles and stuff on behalf of Israel. We've had Keir Starmer come out this morning and say that UK will not be involved in anything like that. So far, which is an interesting decision to make. You kind of hope that if they're in the area, they would they would kind of help in that kind of regards, but. Well, it's not for us to make decisions like that. So one to keep an eye on that front. And just quickly, finally, from me before we go back, on the damage inflicted, Iran is reporting no nuclear damage. And the IAEA confirms that. The Iran told the IAEA no radiation spikes occurred at its Natanz nuclear site or Bashir plant, despite Israel's strikes. And the IAEA have confirmed the report, although it doesn't look like they've actually confirmed if the radiation levels have been detected. This is obviously easing some fears of nuclear escalation, but time will tell. But anyway, back to you.
Indeed, yes, very good roundup there, Ryan. Thank you for that. In terms of what all of that, well, certainly, just again to caveat that may all change if you're listening to this later on. In terms of what that's all done to markets, I guess the reaction has been very, very predictable. Indeed, notable upside in the crude benchmarks with both Brent and WTI up by kind of double-digit percentage gains overnight. Although it is worth bearing in mind that we are seeing both Brent and WTI trade quite considerably off overnight highs. Brent topped out at about $78.50 a barrel in the very early hours of the morning here in London. As I speak, we're trading about $6 below those highs. So again, we see this situation where markets are very quick to price in geopolitical risk, but equally quick to fade it as the situation becomes clearer. A general risk-off vibe dominating elsewhere, although again markets are off the extremes that we saw earlier on. The dollar has attracted some fairly significant demand against most G10 peers, with the dollar index reclaiming the 98 figure, in turn seeing the euro come back below 116, cable back below 136. Again, in times of strife, despite everything we've been saying about the dollar losing some of its haven value, the dollar is still where folk want to seek shelter. As for markets elsewhere, treasuries have rallied across the curve. We saw yields down by around about 4 or 5 basis points at the extreme, although again, those moves starting to pare back. And actually, as I speak, the 30-year treasury yield is just ticking back towards unchanged on the day. So sentiment somewhat steadier as the London session gets underway, although clearly still on very, very shaky ground indeed. Gold has found buyers, with the yellow metal trading around 1% higher, up to a high of 34.45 overnight, but again trading about $40 off those highs as I speak. And equity futures fairly deeply in the red across the board, down by well over 1% on Wall Street and here in Europe. But again, the S&P future is about 60 handles off the overnight low. So it does seem as if markets are trying to strike a steadier and a surer tone as we move through the early part of the London session. Although, of course, it is going to be a day of headline watching, and the situation remains very, very volatile. So that is liable to change at a moment's notice. In terms of other catalysts and factors that are just worth bearing in mind away from all of the geopolitical developments, in terms of data yesterday, we had US inflation, PPI, of course, coming after a benign CPI print. PPI broadly in line with expectations at 2.6% on an annual basis in May. We also had the weekly jobless claims data, which was a little bit worrying, to be honest. Initial claims at 248,000. Yes, thank you, Zach. It is 40 on the S&P, and I can't do maths. Thank you for that, mate. Some of us have been up since 3:30 and only had one coffee. So pray for Mike this morning. Thank you. What would we do without Mr. Eisman and
I don't know.
his useful little advice? Maybe get a calculator. Anyway, where was I? Jobless claims. Yeah, initial claims at 248,000 in the week to the 7th of June, pretty much unchanged from the prior print. Continuing claims, though, rose to 1.956 million, which is well above the forecast range and actually a new cycle high. So this again points to the fact that the labour market is in a bit of stasis and a bit of inertia at this point, where the pace of hiring is relatively slow, the pace of firing is relatively slow, and the net effect of that is that it's taking longer for those people who lose their jobs to get back into employment, which is why we see that continuing claims number rising. We did see a modest dovish repricing of Fed policy expectations on the back of that. The OIS curve now discounting around 54 basis points worth of cuts from the Fed by the end of the year. That compares to around 48 basis points that we saw in the aftermath of the CPI data on Wednesday. On the trade front, it was a relatively subdued day in terms of news flow. We did hear from the Treasury Secretary, Scott Bessent. He was testifying to the Senate about something or other. The only real notable remark from Bessent was that he was saying the EU has been, quote, very intractable in trade talks. So clearly the US and the EU are still not exactly best of friends. We also heard from President Trump yesterday. He gave a very, even by his own standards, a very rambling speech. He was going on about Fed Chair Powell, imitating him for quite a while. On trade, though, Trump saying that he loves China and he respects President Xi a lot. Clearly, that's why he's trying to have an argument with him every day. Trump was also talking about auto tariffs. He said that we might go up with auto tariffs in, quote, the not too distant future. Again, certainly something worth keeping on the radar. But the market wasn't overly fussed by that rhetoric yesterday. As for other bits and bobs, sticking with the United States, there was news late yesterday, Bloomberg citing sources that the US is potentially looking to utilize the Defense Production Act around the issue of rare earth minerals. The timeline for getting this all up and running is unclear, but of course rare earths are an increasingly large issue, not only in terms of semiconductors and all the rest of it, but also in terms of the trade negotiations that are ongoing between the US and China. Other notable things from yesterday, we did hear from ECB President Lagarde. She was saying that policy is in a good position. She also met the head of the PBOC in China yesterday, which I'm sure was a thrilling meeting for the poor bloke. And last but by no means least, I've left it till last because I thought he might have woken up by now, but Tom Talks Cars is clearly still asleep. I will mention it nonetheless. Micron, they are going to invest about $200 billion in chip manufacturing and research and development in the United States. They are apparently planning to bring something called advanced HBM packaging capabilities to the United States. This investment includes plans for a whole host of mega fabs, including one in New York, and they've said that DRAM output is scheduled to begin in 2027. I'm hoping that that means a lot more to our listeners than it does to me, because
So,
to be
sorry,
honest, it's a big number, but it could be complete nonsense.
sorry. The only dram I'm aware of is a shot of whiskey.
Well, I must admit that's where my mind went as well, but that can't be right.
Well, I'm assuming it's not, but yeah. Oh yeah, I'll be shocked if we are correct on that one. But yeah, like you said, one for the more technology minded folks in the room. But
Which
thank you.
definitely isn't us.
No, exactly that, exactly that. Well, thank you for that, Mr. Brown. So just some rattling off some more headlines from the overnight news roundup. Again, it's the best way to catch up with all the headlines that move markets. If you aren't already following, do check in on the Substack, on the pin tweet, etc. Obviously, I've gone through all the Iranian news already, but again, that could be out of date by the time you listen. In trade news, China evades US chip curves via Malaysia. Chinese engineers are smuggling AI training data hard drives to Malaysia to bypass US restrictions on AI chip access. US is now planning measures to block China's chip access through overseas hubs, escalating the tech trade war. That's according to Wall Street Journal. Japan, they're resisting US tariffs, eyes auto exemptions. Japan's tariff negotiator, Akazawa, rejected a partial US trade deal demanding a full tariff review. He's confident Japan can dodge higher auto tariffs even if Trump hikes them on others, citing strong US-Japan ties. I did see a report on this that so far Japan's treasury holdings haven't been used in any way as a bargaining chip, but the fact that the sources are talking about it means that it's possibly not far off the table, so one to keep an eye on. I know Finance Minister Kato said he didn't discuss Japan's 1 trillion plus US Treasury holdings in past with US Treasury Secretary Bessent,
Mm.
and he is so far signalling no immediate plans to adjust Japan's massive US debt exposure. So it's one of those that it makes a good headline, anything involved in this, and the usual crowd will be pouncing on it. But so far, nothing's been mentioned. So just to kind of be mindful of there. In macro news, House Republicans passed the 9.4 billion with a B dollar cuts to foreign aid and public media. House Republicans narrowly approved a 9.4 billion rescissions package, slashing foreign aid and funding for NPR and PBS. The move faces Senate resistance but signals a push for fiscal austerity that could curb US global influence. That's according to the Wall Street Journal. Federal judge rules Trump's National Guard move is illegal. A judge ruled President Trump's illegally federalized the California National Guard during the LA protests, ordering control returned to Governor Newsom. The decision highlights tensions over federal authority and could impact state-federal relations. Bank of Japan, that signals potential rate hike as inflation rises. Bank of Japan officials noted stronger than expected price increases, opening the door to rate hike discussions if trade tensions ease. A tighter policy could bolster the yen and ripple through bond markets. That's in
Of course,
Bloomberg.
the BOJ meet in the very early hours of next Tuesday morning.
There you go. UK hiring slumps amid tax hikes and Trump tariffs. UK employers scaled back hiring in May, hit by Labour's steep tax increases and Trump's trade war fallout. That's according to the REC KPMG survey. The slowdown signals economic strain in the key European markets. Again, everyone bar the Treasury and the Labour Party knew that this was going to be happening after Rachel from Accounts decided to up national insurance contributions from employers. So no surprise there, but it's just sad to see. Taiwan's dollar hit a 3-year high on stock inflows. Taiwan's dollar surged to its strongest level in 3 years, driven by global stock inflows, exporter greenback sales, and easing trade tensions. The rally could support Taiwan's tech-heavy markets. South Korea's president meets conglomerates to boost the economy. President Xi Jinping will meet leaders of
Oh
South
yeah.
Korea's. Yeah, that guy. I was quite impressed with myself there. We'll meet leaders of South Korea's top conglomerates on Friday to jumpstart a slowing economy, signaling urgency to counter global trade and domestic challenges. That's in Bloomberg. In equities names, just two here. Starting off with obviously the very sad news and the disaster that happened in India, where Air India Boeing crashed after takeoff. The probe already is targeting the GE engines. Investigators are probing whether a loss of engine thrust, in a GE-powered Air India Boeing 787-3 caused a recent crash. A confirmed issue could hit GE and Boeing stocks already under pressure.
Oh,
More on that.
actually,
Yes, go on.
sorry, I interrupt you again, but that reminds me of something I did want to mention because very
Go
good
on.
example yesterday of how markets have a tendency, and it's an understandable tendency, but a tendency to overreact because obviously we had that news out that the plane had crashed. The obvious impact was downside in Boeing, but also downside in GE and in Rolls-Royce because Rolls-Royce also supply engines for the
Yeah,
787. Now, it took me probably, and the guys at News Corp did this as well, probably about 30 seconds to find out that it was GE engines on that aeroplane and not Rolls-Royce engines. So it's just a sign of how markets always go to the extreme of anyone associated with it we don't want to
yeah.
touch with a barge pole. And then as the dust settles a little bit, calmer heads start to prevail. And I guess there's an analogy with what we're seeing this morning on
Yeah,
the geopolitical front as well.
absolutely, and this is why calmer heads and can often seek out the trading opportunities. It's very easy if you are the kind of trader that can sit on your hands and and react to news like this.
Which is a
There's
lot easier said than done.
which is near impossible to do. This be frank. If you can be one of these traders that can literally sit on your hands for 99% of the day, um, and then react on times like this, do like you said, just do a tiny bit of research when the shit does hit the fan. There will always be opportunities for you. But again, it's very easy to say, and quite frankly, I can't do it. That's why I'm speaking to you guys on here and not trading at the moment myself.
Indeed.
No,
And Chris Dunn, that's not trading advice, by the way.
oh no, no. Well, no. To be honest, this is trading advice. My trading advice is don't trade until you have a clear opportunity, which is very easy to say and very hard to do. Um, right, and finally for me, Adobe lifts forecasts on AI software demand. Adobe raised its full-year outlook driven by strong demand for AI-powered tools for image and video creation. The stock is poised for gains as AI adoption accelerates. That's according to Reuters. And that's it for me. But one before I do pass back to you, just one thing, kind of similar vein to what you're suggesting just then, Michael. I wanted to just quickly flag up about oil prices and geopolitical risk, because as soon as Iran is mentioned, as soon as like missiles and Iran are mentioned in the same sentence, you get the usual folk calling for $200 oil. Now,
No.
this is not the case. Now more than ever, and it's, we see it every time now. It all depends where the action is taking place. Now, it sounds bizarre, but as long as the action is only missiles flinging between Israel and Iran, you'll be surprised how little oil prices care. It's any initial reaction is normally sold into on the upside. What we need to see for oil to have sustained upside across the curve is for the kind of the escalation to be going towards between Iran and Saudi and that and like around the Strait of Hormuz and around all of that. As long as the action stays away from there, oil will be surprising in how little it cares. So anyone calling on this morning's or so overnight's news that oil should be at a trade at $150 or $200, give them a wide berth, because yes, it can get up to there and it will spike up to there if we all of a sudden hear that Iran are playing silly buggers in the Strait of Hormuz, but so far they're not. And quite frankly, it will be a massive escalation if they do anything in the Strait of Hormuz, because they know that will give them no upside whatsoever on a kind of what's the word, on a political standpoint with their neighbours, because it is Iran and it is Iran's neighbours that need that strait to remain open, and it will be seen as like the final thing they can do in terms of kind of escalatory motions. So definitely one to keep an eye on, but don't just be lumping into crude for the sake of it when you hear news like this. Just do yourself a favour, take a breath. Is this directly impacting oil trade? If not, stay out of it. That's all I want to say on that. But yeah, back to
No,
you in the studio.
very, Very well said. Thank you, Ryan. In terms of today, then, I mean, it should really go without saying that we're going to be glued to headline feeds. Of course, opportunity to plug PIQ for its fast and accurate news flow on that front
Indeed.
as the geopolitical situation continues to develop. In terms of scheduled events, they are going to take a back seat anyway, but the docket is actually rather light. At 10 o'clock this morning, we have the latest industrial production data out of the Eurozone. Production seen falling by 1.7% on the month in April compared to the 2.6% rise that we saw in May. This data is not only incredibly stale, but it's also going to be horrifically skewed by all of the shenanigans around tariff front running. So I certainly wouldn't be placing too much weight on that. And then at 3 o'clock this afternoon, we have the preliminary consumer sentiment reading for June from the University of Michigan. That index is expected to rise to 53.6, up from a prior 52.2, and we should also see the inflation expectations components pull back from Venezuela-esque levels that they've been at for the last few months. Of course, there is the potential not only for volatile market moves as we move through today, but also for gapping risk over the weekend, not only in terms of geopolitical developments, but also with in terms of trade, and do bear in mind that there is a G7 summit being held from Sunday onwards as well, and there may be some trade developments around the sidelines of that summit. And of course, not only do we have the geopolitical shenanigans today, but also a busy week up ahead next week. 6 G10 central bank decisions next week, including the BOJ on Tuesday, the FOMC on Wednesday, and the BOE on Thursday. So if you're looking for excuses or reasons to be trimming risk into the weekend, the list is a very, very long one indeed for market participants to be taking some risk off the table as we move towards the back end of the week. And for me this morning and for this week, that is all for the time being.
And for me this week and this morning, also that is all of it. Yeah, thank you very much, Mr. Michael Brown. A bit of a broken week, obviously, because quite frankly, I have been broken this week. But hopefully all back to normal from Monday morning. So right at you. Listeners, thank you as always for tuning in. Whatever you're doing today and over the weekend, keep it tight, stay safe, and we'll see you on Monday. Take care, much love.